because as we've reported on Power Lunch before, in fact we were speaking to somebody from the Agricultural Futures Division of the JSE just about 2 weeks ago about the extraordinary Dust Bowl situation in the Midwest of the United States. And I was noticing last night we had the corn price on the Chicago Board of Trade rising about 1.25%, I think. And I think corn and wheat prices in the United States are almost at parity now. We've got soybeans trading at $16.50 per bushel, which is, I mean, it's extraordinarily high. 1988 was the last terrible drought, and they talked about beans in the teens, got there, but never got to 16.20, 16.30 where they are now. In the Joburg studio is Ernst Janovsky, the head of Agribusiness at Absa. Ernst, the situation in the United States doesn't seem to be getting any better, but is it going to be one of these flash in the pans, do you think, that come September, the crop comes in and things weren't quite as bad as expected, or is this the real deal this time? Is this the real crunch for world food supplies?
Lindsay, I think this is the real crunch. You actually see that stock levels are quite low currently, so everybody is holding thumbs that it won't be that bad. The only indicator that it might not be the real deal is that the December futures are currently a little bit lower than I would expect, given what's happening in terms of the drought situation itself. So in the long run, I currently see that we'll definitely have a shortage in stock levels building up. So this is going to be not something that's going to be alleviated now, but will only be alleviated when the Southern Hemisphere starts kicking in and when they can start producing.
Okay, so this is an incentive for people outside of the Northern Hemisphere to up their production. And is it too late to do that, though? I mean, you're more of a farmer than I am, or more au fait with farming practices than I am anyway. Is there a chance for other people? I mean, one man's meat is another man's poison, so somebody will obviously benefit from these enormous price spikes we've seen.
Well, definitely everybody else in the Northern Hemisphere will actually have the opportunity and currently are enjoying that higher price and has got the ability to fix. Even our local producers are currently fixing prices for next year already. So this creates a huge opportunity for farmers in the sense that they can actually put a price into the market. It means that this higher price will actually realize for all farmers out there. It might be that if prices come down, that the traders will take a little bit of pain. But at the end of the day, currently, my view is that prices will remain quite high, because the Southern Hemisphere is only a third of the total production area that's in the Northern Hemisphere. So although we in the Southern Hemisphere can make up something when we start planting in December, that it's purely that we won't be able to make up everything.
And it's not just the prices that we see on the Chicago Board of Trade and on the South African Futures Exchange, of course. It's the knock-on effect, because in the United States of America, most of the maize, or the corn as they call it, that is produced goes into animal feed, so therefore chicken prices and meat prices go up immediately. The other thing that's quite important, I think, is your article's reference to food security. Now, food security means that there is a potential for social unrest worldwide. So it's not just the price going up because of a drought. There's all sorts of socio-economic implications as well.
Yes, definitely. If you really take the knock-on effect currently, the one that's going to be the hardest hit will be the poultry industry, because they're the biggest user of grains, and especially soybeans as well. So they are the ones that's going to feel the pain the first. But they are lucky in the sense that they can actually, within 6 to 8 weeks, actually change the cycle around. But somebody like the beef industry will actually feel the pain at much longer, because if you want to kill the factory that's producing this, you're actually going to slaughter more. So you're going to have an overrun from the beef side for quite a long period of time, for the next 2 to 3 years. So it means that the livestock industry is going to take some pain for the next year and a half, because of this high price that you currently see. So out of this is born actually something that at the end of the day, in 2 years' time, you'll see a shortage in the protein industries, and therefore you'll actually start seeing prices hiking again, and this is going to drive food inflation. In other words, the short run is going to be the grain side driving food inflation, but in the long run, it's going to be the protein side that's going to drive it.
Yeah, so the last thing we need in South Africa is now for the rand to go on a run, as well as the international food prices to go on a run, because the 5.5% CPI and the 6.6% PPI that we've seen, and we're all saying, phew, thank goodness for that, we can afford to keep interest rates low, might not prevail, because food is obviously a terribly important part of the South African inflation equation.
Yes, currently it's about affordability, and I'd rather have a higher price and have food on the table than no food at all. So it's about profitability of the farming industry itself as well. So at the end of the day, I think this is the grain industry is going to be very profitable currently, and that's going to drive the market upwards for the farmers itself. So the reinvestment in Africa is definitely on the cards. So I see a lot of investment coming into Africa itself, because if you take the demand for food over the next 50 years, you'll find that we actually need more food in the next 50 years than we utilized in the last 600 years. So this is a huge challenge that we'll have to do, and this means a lot of investment that we need to put into Africa and Latin America, because that's where the reserves are, that's where the areas are that we can actually produce more food.
Do you think this is the sort of event that actually focuses people's minds on the fact that Africa has enormous potential for food production? There was that very well publicised case of a South Korean company going to Madagascar and leasing land for a massive amount of land for its own food needs, and none of it was going to Madagascar, but it was all going back to Korea. And there's been cases of the Chinese, for example, going into Tanzania to procure land for rice production. Is this the sort of event that, again, focuses Africa's latent potential?
Yes, definitely. I think this is the whole drive behind the scenario. It will focus the drive into Africa quite extensively, because I think if you really look at Latin America, a huge tracts of land has already been debushed and in that process already been utilized for agriculture. Africa is still barren land, and that tropical conversion zone right across from Angola right across to Mozambique, that's the area where you can actually, it's bigger than the Midwest of America. So that's the potential that's actually capable of being unlocked. So we think with a little bit of infrastructure spend, in other words, roads, rail, those type of things, that you can move, because unfortunately food is bulky, and we need to move that to the urban areas where people are staying, and that's the opportunity currently, is the investment in infrastructure for the beginning, and then automatically agriculture will follow on top of that.
Yeah, Ernst, thanks so much for your time this lunchtime. That's Ernst Janovsky, Head of Agribusiness at Absa.